Okay, we're ready.
And we're live, so you've got 10 seconds.
Okay, thank you very much. Thank you everyone for joining us today. This is for the Norwich City Council Audit Committee, Tuesday the 24th of November. We'll start the items on the agenda. Item 1, apologies. No.
Chair, we've had apologies from Councillor Giles and we are expecting Councillor Samaisi to join us.
Thank you, Jackie. Item 2 on the agenda is public questions and petitions. Yep, we have not received any of those. That's fine. So we'll move on to item 3, which is declarations of interest. Yes, Councillor Driver.
Yeah, I've got an interest in 10B on the green papers because I'm a council tenant, but I will be there and will as well. Thank you.
Thank you, Councillor. So we'll move on to item 4, which is the minutes from the last meeting. I'm sure councillors haven't had a previous opportunity to read that. Are we all in agreement on those minutes? Yep, I see affirmative there. That's great. So we'll move on to the main business of the meeting. So we'll start with the item 5, which is the internal audit update. That's page 13 on your agendas.
Sorry, Chair, just to interrupt.
Yes, Councillor.
Councillor Driver said about is a council tenant. I'm a council tenant. Do I need to declare that?
Yes, and I think you have done so.
Yeah.
Thank you. That is another interest, Councillor Peake. That means you don't need to leave the meeting. Thank you.
Thank you, Councillor Peake. So item 5, the internal audit update, and I'll pass over to Audit Manager Gavin Jones. Gavin, thank you.
Thank you, Chairman. This report sets out the audit coverage that we've carried out to date and proposed coverage for the rest of the year. Starting with the revised plan on part 2 of the report, you'll see we've got a revised plan of 450 days, which is a reduction of about 50 days. A loss of days due to some early disruption with COVID-19 related issues and some loss of time just due to professional training commitments. The plan sets out, as I signposted at the last meeting, a reduction in key financial systems. We're moving to a risk-based approach phased over 3 years. So certainly during the first quarter of the year, the team were looking in detail at what they did and risk assessing those. So we'll be covering out the risk elements of those. So I'm looking going forward to be doing about 100 days a year on key financial systems compliance work, which well, obviously subject to system changes and previous audit opinions, and that'll be phased in over a 3-year basis. Some of those reviews will be done annually, but many others will be done every 2 or 3 years, dependent on risk. The plan will maintain, and moving forward, the plan will maintain consultancy and pro advice at a good level, which is one of the priorities of the Chief Executive. And I'm on board with that in terms of being proactive with our work. We're focusing away from short-term compliance work to more in-depth reviews. I'd have liked to have done a few more, but needs must at the moment, and it's a fairly unusual year, to say the least. Contract management will be a priority going forward, and you'll see we've done some work this year on waste services contract. Moving forward to future plans, we will be doing at least one of the big contracts every year. So my intention is to look at the joint ventures as they go live, about 7 or 8 months post going live. So we get in early on and have a look at the controls in place for those. And I'll also be liaising with the head of procurement over thematic reviews, which will feed into her training programme. The other key changes, we're procuring some IT audit work from an external contractor. And moving forward, I'll be looking at doing an infrastructure review and an application review every year at least. And we're starting off with a review of cyber security. Section 4 of the report highlights the work we've done to date. So on key financial systems, I've summarised the findings from a review of purchasing cards, which concluded reasonable assurance. And the emphasis around that was very much around the changes and the additional use of cards and approvals for expenditure around the first lockdown, COVID-19 lockdown. So that's reassuring to note that controls were operating reasonably well. Other compliance work, you'll see policy and procedures, which we covered through discussion at the last committee meeting. Unfortunately, it's got a limited assurance review opinion. That's not an opinion on the policies themselves, but on the framework. It needs to be tightened up and needs proper review structure. We're looking at that annually, but the opinion also reflected the fact that previous recommendations hadn't been actioned. So we've got a process in place, particularly around the corporate governance group. Some of that work's started already. So I'm optimistic that we'll get something much more structured going forward. We've done some work on business support grants, obviously a key risk with COVID-19, very much around requirements set by government in terms of having a proper risk assessment process in place, looking at checks and balances the services do, and having a post-assurance plan in place as well. Obviously, the speed and the requirement to make grants payable as quickly as possible was the priority. And so with that comes a high risk of fraud and error. So we've made a number of recommendations around the risk assessment and the post-assurance testing regime in place. A number of the checks were found to be fairly well observed by the service, and that'll be ongoing throughout the year in terms of their work on that. We're not going to give an audit opinion on that work because of the limitations of it. And I've signposted as well that as part of this year's National Fraud Initiative exercise, there'll be a data matching check on that. So the results of that will be due in February, which is data matching with other public sector bodies. So I think if anything comes out, it will come out in that at the moment, but nothing too concerning from what we've seen. There have been a small number of frauds attempted, particularly up front, that was subverted nationally. We're also part of the National Anti-Fraud Network, so we get quite a lot of alerts there, and they've been verified and checked against data we hold to ensure that we haven't made any payments that we shouldn't have done to some of the fraudsters out there. Signposted contract management work that will be hopefully reported at the next meeting, and we've completed a service review on licensing, which I've summarised the findings there, which are reasonable, and we're currently doing some work on the authorities' compliance with their equality duties. And I say IT audit work we're doing, looking at cybersecurity. 4.8, I won't go over in detail because I think, again, I discussed this at the previous committee meeting, but we put on a new regime of follow-up of recommendations. You'll see in Appendix A, we have four high priority recommendations outstanding, 3 relating to GDPR compliance and 1 relating to the housing repairs contract, which is on the agenda later on. So the intention is that that'll be at every update report I do. There'll be an appendix on everything outstanding on those. So hopefully that'll drive through addressing those issues. One of the GDPR ones relates to replacement of legacy systems, so that will take a fair amount of time to ensure they're fully compliant with GDPR. The council's in the same situation that every other council's is, so that will take some time to resolve, but they're monitoring that closely. And I've also included a summary of all recommendations going forward, but the main ones at the moment are those relating to GDPR and housing repairs contract. Happy to take any questions.
Councillor Wright.
Thank you, Chair, and thank you, Gavin, for your report. I have a question that relates specifically to the business support grants. And I suppose it's a two-part question. Firstly, following the work that you did from the March round of grants, has the council changed anything for the current round of grants? So I appreciate that businesses are currently applying for money. And secondly, do you know how we sit compared to, say, other local councils? The reason I ask that is that I have a particular business that's been in touch that suggests that the standard, the barrier for Norwich's before it will pay out a grant, we ask a lot more questions and a lot more thorough than the neighbouring Norfolk, which seems to have paid out almost instantly without asking any questions. So I wonder if there is a sort of a standard by which local authorities should pay this money out. Thank you.
Right. To answer your second point, the council are following the guidance set by central government. So they will carry out some more detailed checks if they feel the nature of the payments warrants it. So on a higher risk, so we're not convinced. In terms of lessons learned, I think very early on this, when they were doing the grants, some of the guidance was still coming out from central government. So the basic requirements are there, but that's been strengthened as we've gone forward. So that's in place. So I don't see a tremendous change in how this council is operating. I don't know how they're operating in comparison to other authorities. I did attend a session run by the government, a number of workshops recently, and it suggested that the incidence at the moment of fraud and error was less than expected. So but I couldn't make a direct comparison.
Thanks very much for your answer.
Thank you, Gavin. If I let in the CEO at this point. Thank you.
Thank you, Chair. I think councillors will be aware that particularly in the spring, the emphasis from the government was very much about speed of getting the grants paid. So much so that they were kind of regular, although the government didn't refer to them as league tables. For all intents and purposes, there were league tables published, which set out, you know, where council stood in terms of allocating the money. You know, we need to strike that balance between responding to applications and getting the money out in a timely way, but also, even though it is not kind of locally generated funding, it comes to us from central government. It is still taxpayers' money. So it's about striking that balance between due diligence and speed. And I think we got that balance right, particularly in the spring. We were, I think, at points the best performing authority in Norfolk in terms of getting the money out of the door, whilst also applying those due diligence checks. And we are joined up with other authorities locally. The Revenues and Benefits team are a part of a wider group, regularly talk to other councils about what's happening in other parts of the county. And we are learning from what's gone before. You know, there were some systems issues which have come up along the way, and we're much more prepared now to kind of, when the guidance is ready, to get the money out. I guess the other point is, quite often what holds us back here is waiting for the guidance from government. And as soon as we get the guidance, we're kind of as ready to go as we can be. So I think we have managed to strike the balance between applying those due diligence checks, but also getting the money out in a timely way.
Thank you. I see Councillor Schmier is indicating. Is there anyone? Is that on this issue of business grants? Yeah. Okay, Councillor Schmier.
Yes, thank you very much, and thanks to the CEO for and to Gavin for their answer. I suppose my question is looking at the sort of onus on Norwich City Council as the sort of issuing branch, as it were, of these, well, quite frankly, nationally eye-watering sums. And I understand, of course, that the need for speed to get these out was imperative, given the tremendous sort of challenges that businesses were facing, and also this unprecedented shutdown of the economy. But I am struck by the fact that I think it was the National Audit Office late last month said that taxpayers could be sort of putting a bill of something in the region of between 15 to sort of 30 billion pounds to cover bad debts as a result of policy of basically giving money out or lending money to businesses that clearly couldn't pay them back, or indeed through fraud. And I know fraud is only a very small part of it, but given the fact that in your report, Gavin, you mentioned about how we've obviously lost hours as well in oversight through internal audit, I was just wondering what onus is on the Norwich City Council to deal with these issues, and do you feel that the right sort of balance is being struck in terms of investigating them going forward, please?
Okay, so summarise the exposure at Norwich City Council. Basically, the government will underwrite any losses to fraud or error, providing that each individual council's done a proper risk assessment and has a post-assurance payment plan, post-assurance plan in place to do some diligence checking, which will be ongoing throughout the year. So that's very much what we've looked at, which we do have, and those plans are being submitted at periodic intervals to BEIS, at central government, to review. Guidance is changing all the time, so if they feel there needs to be more rigour in terms of the post-assurance checks, they will do that, and there's some reconciliation work. So I think, as Stephen said, I think that the council have got the balance reasonably right in terms of checks against risk, and given the speed, the need to get those out to businesses in need. But I think going forward, we're in a reasonably strong position. I think the basic checks are in place. I'd be very surprised if there's nothing further that comes out nationally and maybe locally as well in terms of fraud and error. It's like manna from heaven for these fraudsters. So we've just got to keep a watching brief, and as I say, be aware of any national alerts or any good practice elsewhere, which were well cited on.
Councillor Peake.
Thanks, Chair. Just one little quick question on the contract management on 4.3, the waste services contract. I've heard a report that people aren't recycling correctly, and when it goes to news, it's rejected, and it costs the council money then, and to be disposed of for landfill. I just wondered if that's been taken into consideration, and what is the cost of that at all, please?
Well, I'll come in quickly there. I assume that when we actually take the contract management report at the next meeting, that might be something to consider there. But Gavin, anything to add to that question?
Yeah, I mean, we've not looked at that micro level of assessment. Ultimately, there is a charge, the more waste. I don't know the complexities of how that's dealt with opposed to the county council either. It's an ongoing problem in waste services. It's the same wherever you go. So there are controls. This is the audit review solely looked at how we're managing the performance of the contract.
Yeah, no, I think it's a good question as well, Councillor Peake, and I think we'll come back to it when we have the item on the next agenda. Councillor McCartney-Gray.
Yeah, thank you, Chair. I just have a question on joint ventures on page 17 of the document. So it's 4.3, just underneath waste contract management. It says that as well as providing advice and critical challenge, that the audit has drafted template policy documents on risk management and whistleblowing for the new wholly owned company to consider and amend and adopt as required. Do you have any sort of idea when they will be considering those?
Well, they've just appointed the chairman, non-executive director, and one other key post. So they've just appointed the board. They're in the process of another couple of appointments. So once those boards are in place, then I'd expect probably after Christmas, between February and April, they'll be looking at the governance arrangements. So they're fine tuning those to suit their needs. At the moment, what we've done is just basically replicated them and fine tuned them for a wholly owned company perspective. So it's for them to look at. Those are just the two that internal audit have got involved in. There's a whole raft of governance papers that have been done by various different parts of the council.
Councillor Gray, come back there.
Sorry, so does that mean they missed those if they've already got, or was there different departments from the council putting forward templates for the new wholly owned?
Yeah, I mean, responsibilities have been dished out to the relevant people. So HR have done some issues, etc. So yeah, it's within the council. They're there as a suite of good governance practice, and obviously it's for the board to consider those and sign those off.
Yeah, lovely. Thank you.
Thank you, Councillor. Just to pick up on that point that you've raised there about joint ventures, I think it's interesting to hear Gavin's reply. Obviously, you've been directly involved in some of those recommendations. You've obviously stated that a raft of members of staff, will be helping to put together those different sets of policy. I suppose from the audit perspective, I mean, obviously, I think first of all, it's very positive that that you've been involved in a consultancy role at the beginning to help alleviate any contract management concerns before they manifest. And so I think my question to you is that if there are a myriad of sources for policy that will be presented to CLT and the board for consideration, how do we get an oversight and overview from your work as to how you feel that they will work and their ability to their compliance ability in the future? So will you give an opinion on the overall suite at some point to back to management in order to sort of be sort of second checking it, as it were?
No, but they're going through a project board for consideration. So one of my colleagues is on a detailed project board. We'll have sight of those going forward, and so we'll be proactive in any comments that we make on those.
Thank you for that, Gavin. So there's a lot in there. So I just would like to, Annabelle would like to come in here. Thank you.
If you wouldn't mind, I just want to give you some assurance, because I've had an introductory meeting with our new chair of the new company, and fundamentally one of the things she said that she really wants to start developing and signing off for the new board is that risk register. So hopefully that will give you some assurance. That was literally our first meeting and first conversation. It was about where we were at and what we would be doing. So we will be doing that. In relation to governance going forward, though, there is agreement within the documents that we've got with the company that actually specifies that they will be reporting quarterly through to the shareholder as part of the council. So there will be full oversight of governance, whether that's relating to health and safety, risk, financial reporting, and clearly the oversight of delivery of the business plan that will be approved by Cabinet. So there's a full governance arrangement that's being put in place.
Thank you for that additional information, Annabelle. That's very much appreciated. So there's a lot in Gavin's report here, and we've had questions from councillors on it. Are there any other points or questions about the revised audit plan or the work that's been undertaken from any other members? No, I don't see any indications. I'll just pick up just a couple of little points, Gavin, if I may, just really briefly. So, yeah, so what you said is we've obviously moved away from some sort of shorter compliance to sort of more substantive service reviews, and to do those substantive service reviews, I think is a very positive and proactive step. It helps to kind of, you know, weed out any issues and set good practice going forward. And you said at the beginning, obviously, that maybe not as much compliance work it has taken place, will take place, and that's obviously due to circumstance that we're in this year. Could you just elaborate on that further a little bit for me about where ones that you would have maybe seen as more desirable compliance work that you may would have liked to have seen happen, and can you give us some assurance that that'll be the case, that there'll be a bit more compliance work in the next year's audit plan?
Right. Okay. I'm happy with the level of compliance that we're doing this year, and that will be the same level of compliance we're doing going forward. So I've cut the audit plan as we presented to you in March was I thought overburdened with low risk compliance work going forward. So 100 days a year, it so happens has matched what I would like to do going forward. I think as a sort of, I always review audit plans as like a piece of cake. So you sort of take one slice, which is your basic key compliance work. And you have to do an element of that every year for me to make sure the basic financial controls are operating effectively. And I think we're doing that. As I've said in my introduction, I'm just trying to get everything much more on a risk-based footing. There'll be some elements. I'll always want to do some work on payroll or creditor payments because there's such big systems that it's always different elements you want to do. If they go wrong, then it's quite a big issue for the council. But some of the more something like treasury management, they go wrong, yeah, it's big, but there's very little in the past that we've seen that have been major issues. So there's not really a lot of point in doing that every year unless there's been a significant changes of systems, etc. So I'm comfortable in terms of the work we're doing going forward. I think what I meant was I probably wanted to do more service reviews going forward, but because we've had a slightly curtailed program, and I've got a skill set of people that are compliance-based auditors. That's going to take a transitioning time. The other thing is the risk management, getting that in place and more embedded in the organisation will help me massively and yourselves in terms of target coverage much more effectively and hopefully add more value to added work going forward.
Thank you for that, Gavin. So yeah, I mean, I think you're justifying that kind of shift, and obviously it's quite a shift in the audit plan from what the audit committee is used to seeing the working process. And I mean, for an example, that having the key financial systems being conducted over a phased 3-year term based on risk rather than being undertaken every year, it is a massive shift. And obviously what you've said is that you're justifying that on the basis of risk. I think that's fine. We are lucky enough to have Mark here from EY, so I could potentially also throw that question across to our external auditor to just seek a view on his opinion on that risk base. And I do see that the chief executive would like to come in. So if I let the chief executive in first, and then maybe Mark might respond as well.
Thank you, Chair. I think if it would be helpful just to kind of understand where I'm coming from in how we approach audit, and these are, this forms some of the basis of the conversation that I've been having with Gavin. I see audit and the use of audit as a key part of our improvement journey as a council. So audit from an officer perspective is not something to be feared, it's something to be embraced, because I want the council to be a learning organisation that assesses what we've done but also, so celebrates success, but also learns from experience, and which is why I want our approach to audit to be a bit more agile. So clearly, we are going to continue to need to audit key systems and processes, and that will continue. But actually, in previous organisations, I've worked with audit in an advisory capacity, where you're perhaps at the start of a process to develop a new policy or a new approach to governance, and having audit in there from the start to advise as you're developing plans and processes is really helpful. And I don't think that the council's done as much of that as I think it should have done. So I think that's part of our new approach. And I think this is where we're trying to strike that balance between auditing those kind of key systems, but also allowing us to use audit in more agile ways, more risk approach, and take a more risk approach, and also to respond to some of those emerging issues that are happening across the country. So Gavin mentioned a review of cyber security. There have been some high profile cases in recent weeks about local authorities being subject to cyber attacks, and we need to look at how we can use audit to consider our response to that. So for me, it's about embracing audit, and it's using it in a more agile way, but not moving away from an approach where we continue to make sure we audit those key systems and processes so that we've got that ongoing assurance.
Thank you for that. And, I would agree with the Chief Executive in the fact that having audit as more agile and more responsive and a better tool for the council is absolutely a positive way forward. But it wouldn't be right and of me to not take a position of needing to seek assurance that the changes that we implement are not putting us at an undue risk. So that's why I posed the question. Mark, from EY, do you have an opinion on just to help give the council reassurance, give the councillors reassurance here about taking this slightly more risk-based approach to the key financial systems?
Sure, certainly. So, it's an approach I'm seeing a lot elsewhere and has been for a number of years now. And I'd echo everything the Chief Executive said in his summary. I think internal audit is just one tool in your armoury of providing you with assurance. And gone are the days where it's good to get assurance year on year on year on exactly the same systems. That's not providing you with any additional assurance unless the IT behind that system has changed significantly. You want to focus your internal audit where your risk is, and that's your risk register, to provide you with assurance that your control gaps are being mitigated to minimise the overall risk the council faces. And that's the best use of an internal audit resource. Clearly, key financial systems need to be reviewed, but on a basis over a number of years is perfectly adequate, unless there's a key IT change or a key system change that would necessitate something more frequent than that. But as a committee, you should be getting used to receiving kind of lower risk internal audit reports because they're dealing with higher risk areas on control frameworks rather than getting really good internal audit reports on the same system year after year. Those are old approaches.
Excellent. Thank you so much for that, Mark. Is there any other comments on that? And any other comments on the item? I think Mark has given us that assurance there, and I think we can bring that item to a close and conveniently and sort of just perfectly move on to item 6, which is risk management update, which is exactly what we were just sort of highlighting. So I'll hand over to Gavin. Thank you.
Thank you. Just as a background, you'll all be aware that risk management was identified in the audit manager's annual audit opinion last year as a key issue where things needed to improve, and that's been a priority on the annual governance statement as well, which is you'll see later on in this agenda. And I'm pleased to be able to provide you with a positive update on that, in that we now have a corporate risk register in place, which is shown in Appendix A. We've done a complete reset on the whole register So we started from scratch, a variety of workshops, meetings and discussions at the corporate leadership team. And that's also replicated in large part at directorate level. So although still some way, a bit of way to go on a couple of the directorates, that's largely in place too. So I think one of the issues that probably didn't come out from last year's audit report was that there wasn't really any visible risk process outside of the corporate risk register. So that'll develop over time. The register's obviously new look. We no longer have an online system in place. I think LGS used the GRACE system. So it's now manual, but that gives you greater flexibility on presentation. Key methodology is unchanged, and the risk appetite is unchanged. And those elements of the authority's governance were in place. So this is really about application. I have to say, to back this up, Stephen's introduced the corporate leadership team's assurance group, which will review risk high up on the agenda as a priority every quarter, along with other elements which I'll go into on the annual governance statement. And the rigour of that has come through already, because I think risk management was due to come to this committee in January, but there's been a significant push from Stephen and his team to get this in place and to get a first sight of this to the audit committee as early as we can. And it will be going to cabinet in a few weeks' time in December. So the register's in place in the appendix. It's largely come as no surprise, it's largely dominated by finance issues and recovery from COVID-19 issues. So moving forward, hopefully once we get a fully fluid process in place, issues will be generated from the bottom up as well as top down. So we'll get issues coming from the service risk registers as well. So in summary, I'm a lot happier where we are now. I think we're in a far better place than we are in March. I can't give you assurance it's embedded. That'll take place over the next couple of years. In terms of the role of the audit committee, it's to have oversight that there's a proper process in place. I think you'll get that oversight over a period of time, not just with a standalone one-off. So I think, Chairman, you requested that it's come to committee initially at least twice a year. So I'm proposing to update this well, it'll be updated regularly live anyway, but it'll come to committee again in July, and maybe we'll present the review of the policy then at the same time. I won't be able to answer detailed questions on the risks. We have got 3 members of the leadership team here, thankfully. Might be able to help, but hopefully they'll take this positive update. Well, happy to answer any questions.
Thank you, Gavin. I'll let in the Chief Executive.
Yeah, just quickly, just to build on some of the comments that Gavin has made. Similar to audit, this is for me a priority for the organisation, and we, as Gavin says, we've done a lot of work over the last 9-10 months to develop a whole new corporate risk register, and I've now put in place a group, a CLT assurance group, which meets quarterly to consider finance, performance, audit and risk together as part of a combined report, and that will continue to bed down and kind of grow its strength over the coming months and years. So where I want to get to is a situation where we have a set of directorate risk registers owned by directorate senior management teams, and they regularly scrutinise those risk registers, and depending on how a risk scores in terms of likelihood and impact, that will then kind of feed up into the corporate risk register, and that's what we scrutinise at CLT. It's a living document, and it will continue to evolve. Gavin made reference to it here. Also agreed with Councillor Waters as the leader of the council that the risk register will also go to cabinet, because so clearly cabinet takes decisions on policy decisions, finance, and performance. The kind of missing part of that jigsaw is risk. So I've discussed with the leader and proposed taking the risk register on a quarterly basis as part of the performance report, so that cabinet has got full oversight of resources, performance, and risk.
Thank you for that update. I'll throw it open to members in just a second, but I just want to pick up on a couple of those points. First and foremost, I think it's excellent to see that the level of focus is actually happening at CLT, where you're having quarterly meetings. The fact that it can be feeding in from the bottom and the top, that it is a living document. I'd just like to pick up on Gavin's point about how we embed it into the culture of the council. So effectively, I suppose that would be a question towards Annabelle or the chief executive, towards kind of how do you see the council really adopting a process of utilising this document going forward? How are we going to make that happen?
I can kick off. Annabelle may want to add. So a number of ways, so by regularly scrutinising it at CLT, but also, I've made clear to CLT colleagues that I expect them to regularly scrutinise risk at their own departmental management teams. And many of you will also know that at the moment I'm going through a process of restructuring the senior team of the council, and the process to recruit into new director and head of service posts has started, and through that process we will be testing things such as corporate ownership of things such as risk, performance, etc. Because we need to build the platform for us to be an outstanding authority, and I think this is the stuff where actually as corporate leaders we need to take collective ownership. So I'm pushing it for a number of channels, but Annabelle may also want to make some comments.
Yeah, so through the work we'll be doing through reporting primarily, and then it will be developed with the assurance group. That's actually a group of officers that's below CLT. So that's where we'll start to see it moving down through the organisation. But everything we do now going forward, and I think this year has sort of brought it to the fore in relation to financial risk that we take on in everything we do, everyone's far more aware of how actually we need to assess that. And I think I can give you assurance that the work we've been doing in relation to the budget is a very challenging year. And you can see it's one of our risks on the risk register, and we still want to move that to a better position from the target risk to where we are currently sat. But the reality is we are doing that. Everybody is looking at the upper and lower levels of any forecasts we're doing for next year. We're in a very difficult, challenging position without having the settlement known at the moment. So we are having to do a very risk-based approach at the moment. And it is really bringing everybody on that agenda and that journey with us already. And I think as soon as we start doing the reporting in a more visible way right across all of the reports that we take, the organisation will very quickly start to understand the importance of what we're doing and why we're doing it. And the reality is we will be monitoring it. You can quite clearly see here there's an expectation of action, delivery timelines, and lead officers against those, and we will be overseeing that and ensuring they progress.
Thank you, Annabelle. I think at this moment I'll just let councillors in with any questions or views. Just looking around. I was anticipating Councillor Driver there to see if he had anything on the risk register, risk management, but surprisingly not. So thank you for that, Councillor McCartney-Gray.
I'm a little bit vocal today. I just wanted to thank you for the risk register. I love risk registers. It's just so easy to follow and easy to read. But could I just draw your attention to risk 8, sustained increase in homelessness and temporary accommodation? I'm quite concerned that we're going into the, well, for me it already is winter period, we seem to be seeing a higher number of homeless people on the streets. Does Pathways have the capacity to cope? Does it have enough resources at this time? Does anyone know?
Yeah, sorry, CEO. Sorry.
In the absence of anyone from the team, I think Pathways has done an excellent job, particularly over the last eight months or so, in responding to unprecedented levels of people presenting as homeless or being at risk of becoming homeless. We've extended the operating times from Pathways. It now operates 6 days a week. It had been, I think, operating 5 days a week. We continue to kind of go out twice a week to do a homeless count. So we are aware of everybody who is out there. More people are coming every week from various parts of the county, from various parts of the country. So what we have done over the last 6-7 months is we've redeployed resources into the service to try and cope with that impact on demand. So yeah, as with many local government services, we could all do with more resource, but actually we've got to manage within the budget envelope we've got. And I think what we can point towards is some active management of this approach. And I think that multi-agency approach, really has worked. But we are keeping it under review, so we're actively managing this.
Thank you, and I'll just let Nikki in there.
Hello then. Hello, Councillor McCartney-Gray. I was just going to mention then, and Councillor Wright will know this, and other members, because they were at scrutiny. Chris gave a very good review of our homelessness processes and did a very good piece for scrutiny. I don't know if you were there, Councillor McCartney-Gray, when he.
Yes, I was. I was just worried.
Fine. Yes, of course. I was just going to say we could probably share that with other members of this committee if it helps. Yeah.
Thank you for that, Nikki. So just Councillor Wright.
Thank you, Chair. It was just to picking up on this point about what we discussed at scrutiny last Thursday. It was just interesting to note the two sort of outside experts who came in to answer our questions were both very positive after the fact on Twitter around the work that the council's been doing, and that we're basically doing everything we can be doing, and it was sort of exemplar council when it comes to the work of homelessness. So I think it's important to give credit where it's due, and we are doing a good job in very trying times there.
Thank you for that update, Councillor Wright. Councillor Driver.
Yeah, I will just say something on this risk policy. Yes, Councillor McCartney said it's easy to read these with the scores if people look at the scores. My worry is who set these scores, and can I just go on to one which is the chief exec's one on the second wave of COVID-19, where the biggest risk is on there, and it's risk direction going up, and it's up to 20. Now I gather this kind of risk policy on here could change daily. How often do you actually look at this, Stephen? And do you change the consequences and the likelihood to bring this up and down? I mean, how often do this move? And that seemed to me this one could move quite quickly one way or the other, especially with the vaccine coming out. There's nothing mentioned about that in there yet. So I just wonder how quick these scores could go up and down. And is it your view that should be that high, or is it a collective view that should be that high?
Okay for me to answer, Chair? Yeah, okay. So look, in response to COVID, I'm in daily meetings about our response to COVID-19, and we have there's a number of forums in which we are kind of overseeing our response, both as a council. So twice weekly, you have a kind of COVID core team which meets Also, we have a silver group with partners to focus really on what we're doing to get the case numbers down in Norwich, which includes local partners such as the university, the police, Public Health England, and we also meet regularly. I meet regularly every week with the Norfolk chief executives, and the leader of the council meets with other Norfolk leaders to focus on our response to COVID, but also planning ahead. So looking at things such as, sites for further for testing sites, and also sites for mass vaccination. So the risk register is almost kind of being updated on a daily basis through those different meetings. The corporate risk register is meant to capture those however many 10 dozen risks which create a fundamental risk to the organisation and the city we serve, and that will change over time. So I'd expect some risks to come onto the risk register because they'll have been scored by the relevant risk owners to meet that threshold, and over time that some of these risks to come off. So, in a year's time, I'd hope that we don't have a risk around COVID-19 on the risk register. So the risk register is scrutinised on a quarterly basis, but actually the work that kind of feeds into these risks is done much more regularly in relation to COVID-19. As I say, it's a daily process.
Can I ask the last time that the figures have been changed on there, and how I gather they've gone upwards as reported?
Yeah, so this came through CLT a few weeks ago, and at that point we discussed it and we agreed that that these were the right scores for this particular risk. Now, as we move into spring, and if we do get into a situation where a vaccine is being rolled out, I'd hope that we'd start to see this risk come down as we move back to something approaching normality, but it's something we keep under review.
Thank you for those answers. I'm just looking around for councillors. Councillor Schmierer.
Yeah, thank you very much. Could I just turn our attention to risk number 3, please, on page 34 of our agenda, which is about commercialisation, investment properties, NRL, other commercial income sources. And I notice that the score there still seems to be reasonably low. The likelihood, in fact, is very low. And yet, looking at the news as I have done over the last few weeks, we see, I think it's Croydon Council in London, for example, that is now on the risk of bankruptcy. Other councils saying that they're learning lessons from what happened in Croydon. Now, I understand that these are not comparable councils. One is obviously a dual authority. Norwich City Council is a lower tier authority, but there does seem to be an issue there. And I think I saw just the headline alone of a Financial Times piece. I don't have to subscribe to it, but it says the UK regulator finds unacceptable rate of failures in council audit. Now, I'm sure that's not the case here in Norwich, of course, but I was just wondering why the likelihood of a potential problem in this particular area is still considered so low, given what is happening elsewhere in the United Kingdom, please.
Shall I?
Annabelle,
I'll
yes,
take that
please,
if you don't
please.
mind, Chair.
Yeah, please.
I think the risk that we've assessed here actually reflects where we are as a council and our position and approach to what we've addressed. So fundamentally, we've had an audit report of which you'll see the detailed feedback later, where actually we've addressed all the recommendations and issues that were previously identified. And I think we're in a really positive position going forward. There are effective governance and reporting around how the company is working, and the shareholder does get regular assurance in relation to where the company is going, and whether that be in a cash flow, sales position of the properties and the overall management. So the visibility and oversight of the company now is very different to where it has been previously. And I think this score appropriately reflects the position of this council and how we're now managing that. So I think it's appropriate that the score is as it is presented in relation to this council.
Thank you for that answer, Annabelle. I mean, just to pick up on that point and Annabelle's response, obviously, when we consider the annual audit report from the external auditors, there is comments and views around commercialisation and the associated risks, which I'm sure we'll discuss at that point. And if management are so minded that through that discussion they want to alter that score, then that will be an option open to them. But I think we'll discuss those kind of risks shortly as well. I'm just looking to see if any members are indicating, and so just to briefly pick up the way I look at it is that Gavin's kindly put in the role of the audit committee in his report on page 30, section 8, and it's one of just to read those out: keep up to date with the organisation's risk profile and the effectiveness of the risk management actions. So that's a key thing. And so when looking at section 6 and say work is near to completion to ensure that each directorate operates a service risk register, this service risk register is not something that we have requested come to us. So I think a question I would like to sort of put towards officers is to ask, how does the audit committee get an assurance around the effectiveness of the service risk register? So does anyone want to pick that up? Gavin?
Yeah, well, I would say you get that assurance from me because I'm overseeing the risk at least on a quarterly basis. So I can guarantee you if there's an action on the corporate risk register, I'll be chasing with the date as I would a normal action plan with a view to that. And this is sort of the unseen role of it coming to audit committee. Will concentrate minds as well to make sure that that's kept up to date, although I'm sure the assurance group will be keeping a close eye on that. In terms of the director ones, I'll be scrutinising those prior to the CLT assurance group reviews, because obviously I need to know that it's a process in place, and I also need to review individual directorate risks to see if anything warrants escalating to CLT assurance. That's going to take a bit of time over a period of time, but I will have close scrutiny on that process. And I've also mentioned in the covering report, we will audit that next year properly, as not that we're not doing properly, but as independently as an audit function. And I would suggest until we're really happy that the organisation's completely on top of it, we'll be doing that every 2 years.
Yeah, no, thank you for that, Gavin. I was going to mention that as your point 10 in your summary. Full internal audit review will be included as part of the 21-22, and you'll say that'll be biannual. So that's really good. My final point is I just note on risk 3 as well, just to note is that there'll be a producer of a new asset management strategy for March 21, and I think that's a welcome point. I'd also say that the fact that the risk register also has that ownership inbuilt with all of those risks, I think is also a very important aspect of controlling and mitigating those risks. So unless I see any indications from other members, we'll take Gavin's report. Okay, so that's great. Thank you very much for that.
Chair, I think you've accidentally muted yourself.
Sorry. Okay, so we'll move on to the next item, and so that'll be item 7, the annual governance statement. Hannah, I assume, or Annabelle, who's leading on this one?
It's me.
Oh, sorry. Oh, sorry, AJ. Sorry, I'm dreaming. Yeah, sorry. I'm
the last
on the statement of accounts. Yeah, sorry, AGS. No, definitely. Thank you. Sorry.
Okay. I'll rattle through this one fairly quickly, if I may, Chair, as we had quite a detailed discussion, which is quite useful at the last meeting. The situation is this is the final version of the annual governance statement, which we've kept up under regular review during the year, as it's a late sign-off of the accounts. And this has to be approved before we can go on to the accounts. I've summarised some of the key changes we've made. We've had external audit scrutiny of the governance statement. They've made 2 or 3 points which we've addressed. which I put in the report. So broadly, COVID-19 actions have come out from the action plan and key issues, and we've put contract management, internal audit funds, which is on this agenda, in. From the previous audit committee, there were 2 issues raised around Brexit and partnership working. Brexit, as I said at the time, is being managed as a corporate risk. I don't think there's a significant impact on our governance going forward. So we've put that in a new section, which is entitled Emerging and Current Issues, which is before the review element of the plan. The partnerships came up, which I think is adequately covered. I've referenced it on the cover and report in 2 places. I think the issues relating to previously to NRL and going forward in terms of JV, the joint venture, moving out to Norwich City Services Limited, they're quite discrete from a regular partnership, and that involves quite more technical company structure and governance around that in place. And you'll see that we've got the joint ventures remains in the action plan going forward. I'll just reiterate, it's come out several times already, that we've also made reference to Stephen's introduction of the CLT assurance group, not just covering risk, it's looking at performance, much more scrutiny on performance, including HR and audit issues. And I think going forward, that meets quarterly. That's a key element of strengthening the process. The council's not resting on its laurels. There's a lot going on with the restructures and Stephen's vision going forward. And as a the existing structures, such as the corporate governance working group, will be reviewing how we can improve directorate sign-off going forward. So there's a lot going on. I think it hopefully adequately reflects the position we're in. I will give you updates regularly on the actions in place. You've had the risk management update, contract management will be later on the agenda, and we briefly discussed joint venture governance, which is on track going forward.
Thank you, Gavin. So just to remind members, we had a good discussion on this. We had a lot of focus on this in the last meeting. We picked up a few points. I'm pleased to see that we got the new section of emerging and current issues developed there. That the Brexit that we had raised is there, and also I think the supportive work of external audit there, having more highlight on the governance issues around contract management. I think that was right for them to point that forward, and also to have COVID and to put it in their emerging and current issues, I think was the right place to put it. And I think that the other points that Gavin has made about the additional focuses coming down from CLT on governance and performance, I think are right to highlight in the document and are timely to have. So I'm quite happy to accept this. I would say at this point, if there were any small points from Mark from EY, if he had any additional points he wanted to make on the annual governance statement, and then any points from members. So Mark, did you have anything to say on your recommendations?
I didn't have anything to say that I was going to talk about in my report.
Yeah,
it's
okay.
Consistent with our knowledge of the council.
Excellent. No, thank you for that, Mark. And is there any points from members? Nope. So I think we are absolutely happy to accept that the annual governance statement. Yes.
So you just need to formally approve it.
Okay. So if we could take a vote on formally approving, all in favour, please indicate. And that to me looks unanimous, Jackie. Thank you. Okay, and so we'll bring that item to a close, and we will move on to the statement of accounts, item 8. And obviously this in some ways will be kind of taken in 2 parts, because obviously it includes the annual results report produced by Mark and EY. But I think we'll start with our finance officers here to introduce the statement of accounts. Just to remind members, obviously we covered the draft statement of accounts and we did talk at length about it. And again, with good practice, members of the committee have received strong support from our finance team in understanding and working through the statement of accounts, and also having that refresh yesterday as well was very useful. So if I hand over, thank you.
Yeah, so I just want to give you the overview of where we've got to. You'll remember when we came to you in July that fundamentally we've been given additional time to prepare the accounts this year given COVID, and the auditors also had additional time to then complete their audit, which is why we're receiving the accounts at this stage. So we felt it was only appropriate to offer the session we did last night, and I was really pleased by the attendance, and it was a really proactive session going through, refreshing what the statement of accounts said in the draft format and taking you through the changes. To receive a position tonight where we are talking about 4 key areas of changes that we've taken through to the accounts, I think is a really positive outcome. And I just want to share my thanks to Hannah, because she was the Section 151 who oversaw this production of the accounts and fundamentally has continued to support the work ongoing through the audit to this stage today. I won't obviously talk on behalf of Mark, because we have got the audit results report to receive. But the amendments we've got here that we identify on page 73 of your report fundamentally takes you through 4 different areas, and I'm actually going to hand over to Hannah at this point and let her take you through those. But I just want to say, as your current Section 151, I am not concerned at all by these changes that have come through. They're actually just a set of circumstances we see this year, and obviously they enhance the accounts, and actually it's been a really positive outcome from my perspective. But Hannah, if you can just talk through those 4 points, please.
Yeah, sure. So if I'll run you through the sort of the 4 main areas, and then I'll pass over to Mark to talk you through the audit report. So the first 2 are kind of financial adjustments that we've made to the draft accounts. The first is around our net pension liability. So we had received a revised report from Norfolk Pension Fund based on information from their actuaries to update the liability position, and that reflects additional information they had about their investment returns and the impact of a legal case called the McLeod judgment. It is a small amendment that we've had to make to the account. It is just £55,000 increase to our net pension liability, and you can see that movement on the balance sheet. We have been made aware in the last week or so that the results of the Norfolk Pension Fund's own audit has identified an understatement of some of their assets, their whole portfolio of assets, so not just the assets that relate to Norwich City Council. Obviously, our element is a proportion of those assets, but based on the information we have, it wouldn't make a material impact to our financial statements. The second area is a creditor classification adjustment. Unfortunately, this was just a case where a journal was posted to the wrong line of the balance sheet, and we have made a correction to that. It doesn't impact the bottom line of the balance sheet. All it's done is move something out of creditors and into debtors, so no net impact, but we've corrected that classification error. The 2 other areas that we're highlighting to the committee are areas where we've increased disclosure within the accounts in relation to specific risks relating to COVID-19. So the first of those is around the going concern assumption. So we prepare our accounts on the basis that the council is a going concern. It will still be here as an entity in 12 months' time and have the cash to be able to do that. We've undertaken a detailed assessment as management of the risks relating to COVID-19 in relation to the council's finances. As part of that, we've considered our budget position for this financial year, where we're seeing the budget move for next financial year, as well as the reserves we hold and the cash balances that we have in the bank. So taking all those things into consideration, we're happy as management that we have made that assessment that it's appropriate to prepare the accounts on a going concern basis. But what we have done is to recognise that risk and the process that we've gone through. We've included additional disclosure within note 8 of the accounts, which is around events after the reporting period, to provide a bit more detail to the readers of the accounts about the assessment that's been undertaken and the assurance that we can provide in relation to that. The second area that we've increased disclosure is around our property and asset valuations. So each year, obviously, our assets are revalued by an independent valuer. But it has been more challenging this year because of COVID-19 and the unknown impacts some of that has on property valuations. We've done a lot of work with our valuers since we provided you with the draft accounts to try and understand which element of the portfolio there is a potential material uncertainty around their valuations. And that's really just due to there being a lack of information for the valuers to base those judgments on. Note 4 has been expanded to include a detailed disclosure around that, the work that's been undertaken by us and the valuers to reduce the element of the portfolio that we think that valuation uncertainty still applies to. We haven't made any adjustment to the actual figures in the accounts. It's really about making sure we've got that disclosure in place, and we're highlighting to all readers of the accounts the additional risk around valuations and the uncertainty of them relating to COVID. So I can take any questions on that, or I can pass you straight over to Mark and take them at the end once he's run you through the audit report.
I'll just look around to see if there are any questions. Obviously, Mark's report effectively addresses these points, have highlighted these to the council. I would personally say that it's good to see that a more thorough explanation in the notes section. So I think it was right to kind of recommend that additional information was included. But I think it would be worth taking Mark's opinion on those notes. So I think unless there are questions, I'll hand to Mark to introduce his annual audit report.
Okay, thank you, Chair. So I think the context that both Annabelle and Hannah have provided is really useful, because the purpose of my report is to provide you as a committee with assurance so you can approve the accounts. So there are some key messages that I'd like to pull out into a few bullet points for you. I think the first, everyone's aware of COVID, but the impact of it is that Hannah and the team prepared the draft financial statements wholly during lockdown 1, when they were not able to be on the council premises. And clearly we have undertaken all of our audit remotely and not been able to have any contact with officers on a face-to-face basis at the offices. And clearly elements of that are reflected in the changes to the timeline that Hannah talked about, but do have audit implications for how you gain audit evidence electronically in all cases. So taking that as part of the context, I think the report before you does provide you with good levels of assurance. So key highlights for you are, so our materiality level is £3.449 million. So anything above that, in essence, is an issue for me. And that's important when looking at the audit differences that Hannah has just presented. We had a status of our audit and outstanding procedures listed on page 5 or 6, I think, of our report. And whilst it looked like an extensive list, we were just being transparent at the point in time that we issued it. All of those procedures are underway by the audit team, and a couple of them have already been closed off without any additional matters to bring to your attention. So there is, as Hannah says, one unadjusted audit difference. Now, the report said none, but there is one coming out of my review, and that is in relation to the pension liability. So the auditor of Norfolk Pension Fund reported that their assets were understated, and that means that the liability would go down, but we can only work out what the share of assets would be for Norwich City Council, because that figure goes into the actuarial model, and the actuarial model would then tell you what the impact on the liability is. The impact on the liability is not likely to be material, and therefore there are a significant number of accounting adjustments that would be required for just that one number, if you like. So officers would not adjust on the grounds of materiality, but this committee would need to concur with management's view not to adjust, and that would go into the letter of representation. That is not clearly material to us and wouldn't impact on our audit opinion. The other adjusted audit differences are the ones that Hannah has highlighted, only 2 numerical ones, and they're not overly significant in context or significance for me. And the 2 additional disclosure ones, as you say, Chair, I think is good practice to be transparent and allow a lay reader to fully understand the position facing the council in light of current economic circumstances. So the main place we can provide you with assurances is around the audit risks. So this is section 2. So these are the risks that were in our audit plan we presented to you earlier in the year, and it tells
Mark,
you.
Can I just come in a little bit and just to say that just to make members aware, as we go through each section that Mark brings, if it's okay with you, Mark, if there are any sort of questions on these sections on certain elements, if we can bring them up. But if you continue to introduce, Mark, but just do indicate, members. Sorry, Mark.
Shall I just check there's no questions so far?
Yeah, I mean, obviously you've sort of covered the executive summary there. Any sort of points or questions from members? I suppose a little thing for myself is obviously what you've said is that with the pension liability, if I understood that, because I was reading at the same time, Mark, obviously there isn't an impact on your report here, but it is for the committee to consider whether or not they felt that should be that change should be included or not. But the officers had decided that would not be the case. So I'd like to better understand the impact of including that or not including that. Is that okay?
That is okay. So as I was saying, the impact is at the pension fund level. So the total investment assets in the pension fund had to be adjusted because of the audit of that. Norwich City Council has a share of those assets, and it is that share that goes into the actuarial model and drives out Norwich's liability. Without going to the actuary and asking for an updated actuarial report at a cost, you would not know the figure to adjust your liability by, because nobody knows. Well, I certainly don't know what goes on inside the actuarial model, what the mechanics are. What I do know is it's not likely to be a 1-for-1 ratio based on my experience elsewhere, but equally it's not likely to be material. And therefore it can't impact on my audit opinion. And as I say, there are numerous accounting adjustments that would be required throughout the statements if Annabelle or Hannah wanted to adjust. But there'd be a time lag to Hyman's providing an updated report, and then there would be significant officer time in adjusting the account for what is a non-material number change.
So my comment at that point is that although £55,000 is a lot of money to you and me and everybody, in terms of the overall pension liability, it is a very small amount. And if it's going to,
so if I hold you there, the 55,000 has been adjusted by Hannah.
Sorry.
As a result of a updated report they received a month ago or so. This item is 1.025 million is the Norwich City Council's share of assets. So the liability would go down by an amount approximate to that. But I can't say what that exact figure is because it has to go into and out of said actuarial model.
Yes, Annabelle.
If you wouldn't mind, I think part of our consideration in taking that decision was the timing of the information being shared. I think I'm right in saying, and Hannah, apologies if we have heard from our pension fund, but we've been notified of this through Mark and the work that they do in relation to the pension fund, and actually, obviously linking that into our accounts. We're actually yet to hear from the pension fund themselves. So this is really recent news, and because of the fact that we don't believe it is a material adjustment. That is why we've taken that decision, because as Mark touched on there, we would have to commission another actuarial report. And what we didn't want to do for such a late notification was actually impact on our ability to sign off our accounts at the 30th of November.
I agree with that, absolutely, with that principle. And I suppose the assurance that I would receive is that although this has come late in the day, this doesn't just disappear. This will just become and form and part of the next year's process. So when we readjust figures in the following year, that readjustment will be a part of that process. It's just not happening right now here as we look to sign off this statement of accounts. So I think that will give the committee assurance that I think that you've taken a prudent decision there, and we would be happy to have that so that we can sign our accounts now. Sorry to interrupt you, Mark. Sorry, and so just finishing on the executive summary there. I just noted that the information produced by the entity, the IPE, obviously we were under, I'll let Councillor Driver in just 1 second, that obviously we had these very extenuating circumstances this year. And so you've had to obviously adapt the way that you've done data. So you've been doing screen sharing function on MS Teams, to evidence rerunning of reports, and scanned documents and other system screenshots. So my question to you, Mark, on that is that, you know, do you feel that you've got the right level of assurance of those systems and of that information that you've needed under those extenuating circumstances? And can you kind of also guarantee that if we optimistically and positively get back to a normal system of operation next year, that's a kind of more of a one-off process, a COVID process, which we will revert back to actually coming in and testing systems and seeing the screens for yourselves next year, possibly, if COVID's gone?
Certainly. So I'll work backwards. So I would not issue an audit opinion if I hadn't got sufficient appropriate audit evidence in any set of circumstances, irrespective of COVID. So we have got sufficient audit evidence through the IPE process. It has required us to do the things that you highlighted as a different way of doing things, but they have almost become the new norm, if you like. Some of those have made elements of the audit a little bit more efficient. Some of them have made them more onerous. In an ideal world, next year we'll be back on site asking officers questions face to face, because that is pure auditing, but elements of our process I'm sure will be more efficient by doing electronic elements to it. So I think when we get back to the new normal world, it will be a hybrid of the both, but that is not to detract from the total level of evidence that we're getting to be able to issue an audit opinion. That is remaining the same, just a different way of getting it.
Thank you. And I'm aware that Councillor Driver wants to come in. And so obviously I have a tremendous amount of faith in the officers that actually work for Norwich City Council through my ability to work with them. But I would just pose you that the sort of devil's advocate question, Mark, that, you know, one of the things that you look at is fraud and possible fraud. And so if people are, you know, if you're getting, so it's great to see efficiencies. If COVID has brought efficiencies, I think that's a really positive thing in the working practice. But also, you know, that you need to have that assurance that that what you're seeing and what you're being presented is true and right. So I assume that that will be a part of the more face-to-face seeing of things. Is that right? And that won't become the norm, screenshots and stuff of that nature.
Indeed, yes, it is a bridging approach to get us through this. It is not the most effective way of doing it.
Yeah, no, I really appreciate that. I'll let Councillor Driver in at this point, Councillor.
Well, they're the two questions I was going to ask, Ben. Exactly the two questions I was going to ask. But I will add a third. I will add one more. They're really, really good report, Mark. I read it all. I think it's excellent. But I was thinking about the way you worked and stuff. Can you just make it cheaper? How we get a rebate?
Shall we
come to that at the end?
Yeah, we'll pick up fees. We'll pick up fees. Yeah, I just just to pick up, you know, we consider that the material uncertainties disclosed by the failure gave rise to an increased risk relating to disclosures on the value of property, plant, equipment, and investment property valued using existing value or fair use. For more details, section 2. So I just want to highlight that from the executive report, and I think we should move on to the areas of audit focus. Mark,
okay.
Thank you.
Yep, so I'll run you through the risks and the assurances we've got. So in terms of fraud risks, they are around management override or financial misreporting, as you said, Chair. Our audit procedures have not identified any instances that indicate any management override or fraudulent misreporting has been in place. So I think you should take that as a clear message and key assurance. The second risk was around the introduction of the new financial ledger system in the year, and clearly implementing partway through the year brings its own set of issues with it, 2 sets of data, for example. So our audit procedures have allowed us to be comfortable with the data migration from one system to the other. and we are comfortable overall, but getting to that end point has required a significant amount of audit time around mapping how the data was transferred, how the new account structure had been set up, and then how we picked samples across 2 sets of systems. So overall assurance as an outcome, good. Process to get there, convoluted and difficult from an audit perspective.
Mark, just to come in there, thank you for that. I note you say, however, a significant amount of audit resources required to resolve all the coding issues for the new chart of accounts, and so I do duly note that, and I'm sure when we come back to the fees as well at some point as well, that's due consideration. Just to say, obviously, sorry, I thought we were going to take the misstatements due to fraud or error, because I just wanted to, turning back on one item, the incorrect capitalization of revenue expenditure. I just wanted to pick up that, what we did is that we applied our data analytics tool to identify and test journal entries that moved expenditure items from revenue codes to capital codes. So just for the assurance of the committee, can you give us just a little bit of assurance about, your data analytics? Because obviously this is not a process of you physically checking. This is running it through a system. So can you give us an assurance of the system that you use? Because checks are only as good as the system employed.
Correct. So data analytics, in essence, is taking 100% of your accounting transactions as a download from your system or systems in this case, because you had 2 in place during the year, and running it through an EY tool, which then allows us to cut data in different dimensions, but allows us to pull out all journals, for example, that go to a capital code or go to a revenue code, and look at account headings for those, and just do some sophisticated filtering to narrow down a population of, let's say, for argument's sake, 100 million transactions, into looking at the 10 most significant ones that have that risk going in that direction. And therefore, we've really focused down into looking at 10 rather than doing a sample based on a random population and then extrapolating results. So we gain far more comfort by clearly getting 100% of the data in our black box, if you like, and then narrowing it down to my 10 in my example and just testing those. So that is, in essence, what data analytics allows us to do. And we can cut that data in various ways, depending on the test we're doing.
No, thank you for that explanation, Mark. So if I let you continue on, moving on from the new finance system.
Okay, so property, plant and equipment valuations is probably the biggest area of audit focus, audit effort and potentially results, and one we haven't concluded yet. And it is heightened for Norwich for a couple of reasons. One, because you have quite a significant investment property portfolio as a percentage of your overall portfolio. So your investment properties are total 29 million in total. They are all at fair value. And as Hannah said in her introduction, it is that category of asset that has the material uncertainty clause sitting over it from the valuer. So the valuer has said your assets are worth 29 million pounds, but then in their next breath they said, but we can't give you 100% assurance on that because of the way that COVID impacted the market at the 31st of March. Clearly, any phrase that has material uncertainty in it in a report of an expert raises alarm bells for us as an auditor, and that balance would only need to move by 11.5% to have a material impact on the carrying value and the true and fair audit opinion. We are seeing the assets of the type that you hold, so leisure centres, retail, hospitality, for example, moving by up to 20%. So clearly 20% is greater than my 11.5% tolerance level, therefore significant audit attention dedicated to it. And it is those procedures that our team are working through to gain the sufficient assurance that that balance is correctly stated, plus the additional disclosures that Hannah has added to the estimation uncertainty note. So we need to conclude on that.
Okay, just to come in there, so you haven't actually been managed to be able to complete that, but obviously the report today so are we complete? Are you complete, or is this to be done by the 30th? And I assume that when you're trying to look at those values and those value movements, we are effectively talking about the last cycle where COVID was, the lockdown was having a kind of a 1 week impact on those figures, or it sounds very hard for you to get because you've got to establish the value on the 31st of March, as it were, wouldn't it be?
It is the value at the 31st of March, but as a result of a 3-week, in essence, market impact when COVID and lockdown came into account, which is why we are using valuation experts to support the audit team in ensuring that value is appropriate. It is not complete yet. We are working to complete it for the 30th.
And so just from a technical point, and then let keep Councillor Driver in, is so when you're effectively signing off your report here, this is not effectively signed off till you've actually completed that work. So when we are considering your report today, we aren't considering your full opinion yet until that work is complete.
So we are indicating the opinion we'll give based on the procedures and assurances we have to date. This is clearly an area we need to complete to be able to issue our audit opinion. And if there were any audit adjustments coming out as a result of that work, we'd need to discuss that with Annabelle, and Annabelle would need to take a view on whether she adjusts the accounts for it, which is why I believe the recommendation is for delegated authority to Annabelle and yourself to consider any late audit adjustments that are made before approving formally and signing that set of accounts, and that is not out of the ordinary for audits running at this point in time.
Thank you for that clarity, Mark. I'll let Councillor Driver in at that point.
Yeah, Mark, you said about 20%, and you were worried about if it went over 11.5. Can I just ask where you got the 20% from? And these experts, are they valuing these properties regionally, locally, nationally? Because the COVID-19 areas are a lot different all over this country, so the prices would be different. I mean, is that all been taken into consideration?
So Keith, you should be an auditor. They are exactly the questions that our audit team have had to ask about where is that asset located and what are the factors pertinent to that location that would impact on its value. So yes, they are experts, they are professionally qualified valuers, and they are applying the appropriate indices and market knowledge to where that asset is located. And clearly with a commercialisation agenda where you have out of area investments, that becomes a heightened risk for us, and clearly the additional procedures we are having to perform.
Okay, thank you.
Yep, okay. And are there any other points from members on that particular part? Mark, if you would like to continue, I just note in your conclusions that we have placed reliance on the council's experts MPS. Can you just elaborate what what that reliance is? Obviously, you're doing your own independent, but you're effectively saying, are you saying that the reliance you've placed on is the figures that they have given you in the first place?
So relying on the fact that they are experts in their field, so appropriately qualified, appropriately engaged by Norwich City Council, given full access to Norwich City Council's data so they can perform their evaluations as they would see fit.
Thank you, Mark.
Clearly, we are now challenging a number of their assumptions, a number of their values as part of our audit work, and that's just an audit procedure.
Excellent. That's a good challenge. Okay, sorry, Mark. Annabelle.
Yeah, I just wanted to quickly give assurance, though, to the committee that actually the MPS team with ourselves in finance and Mark's colleagues have been working proactively over the summer to agree an approach as to how we deal with this material uncertainty statement. It is something that's happening, up and down the country. It's not unique to us alone, and we have been positively working together. But obviously, there gets to the point where Mark has to have his audit view on the information that's finally shared. But I just want to give you assurance that it was a very proactive approach between us on actually how we needed to address this and ensure we got us to the point where the audit could be concluded on time.
Thank you, Annabelle. And I'll hand back to Mark.
Thank you. So the next area would be pensions. And we have our assurances from the pension fund auditor and We've talked about the two audit differences. We have one of £55,000 as a result of a reruns report, and then the second one is the unadjusted item that we have already previously discussed, so I wouldn't say anything further. In terms of group reporting and consolidating Norwich Regeneration Limited, there are no issues to report following our procedures on that consolidation. And then in terms of going concern, Hannah's right, this is a key audit focus for a number of areas, reasons this year. It is kind of the legal underpinning that central government would bail out any local authority to continue providing services, and that's kind of a default position going forward, but that's a legal position. It's not the same as the financial reporting requirements. And clearly we need to consider both the liquidity and the reserve position of the council going forward. So management did provide us with an assessment of going concern, which we have reviewed and are concluding on, and hence why we've requested some additional disclosures to go into the relevant note. So I think that again impacts every single local authority body in the country. So if you wrap all of those together, taking into account my comments about property, plant and equipment, all those assurances would lead us to be in a position to issue an unqualified audit opinion. The format and wording is set out in section 3 for you. So that was all I was going to say on the accounts. I was then going to move on to value for money because it links to something else you've already said. So yeah, we had please. 2 risks for our value for money conclusion, one around medium-term financial plan and financial resilience, and the second around commercialisation and the governance arrangements for Norwich Regeneration Limited. So the medium-term financial plan, financial resilience risk links fairly closely to our going concern work, and we didn't have any matters to draw out on that. So that was good. Our second risk around governance for NRL came about because of the internal audit report and the recommendations last year, and because at the time of audit planning, a significant amount of media attention to NRL. So we have both considered internal audit recommendations and done a detailed review of the governance arrangements for how working capital loans are approved to NRL, looked at the risk registers, and then looked at the accounting treatment, including the loan impairment with NRL. And we are comfortable that the arrangements in place are adequate in the financial year, and that would lead us to an unqualified value for money conclusion. But we do note in there that the risk register during 2019-20 didn't have NRL on it, and there were some elements of risk management that were highlighted by internal audit as being less than perfect. So it's encouraging both to hear Gavin's comments today and then the Chief Executive's comments about the new improved risk management approach. None of the detriment would cause us an issue for our value for money conclusions. The arrangements were not inadequate, but clearly they have been improved and will continue to be improved and embedded going forward. And the format of the risk report is one that I'm familiar with from other audits that I do, and works well. So I think a good step in the right direction for those. And I was going to just conclude by talking about audit quality, as Councillor Schmierer raised it earlier. So the FRC did issue a report 2 weeks ago about the quality of local audit. EY was the top performer within that, and part of the statistics driving EY's performance was one of my own audits that was reviewed by the FRC. And that came out as one of the top scores. So the quality, I can assure you, of my audits is pretty good, if not very good. So just to wrap up what I've said in my report, provides you as a committee with assurance yourselves to do your responsibilities.
Thank you, Mark. Just to pick up on your last point, as the chair of the audit committee here in Norwich, I found you very highly supportive and highly receptive to any questions or queries I've had, I've very much enjoyed the level of work that you have produced on behalf of Norwich City Council. So I'd like to thank you for that. I'd just like to go back onto value for money just really briefly, and I'm sure we'll touch on fees. I just wanted to note that with the medium-term finances, that it's interesting to note that the council has a track record of underspends. There are different views on underspends, but the fact that there was an underspend of 3.4 million delivered 96% of its savings targets, particularly with the challenges that are set out for us financially now, and you know, that the council kind of making these underspends will help with the use of reserves and the smoothing process that we've got going forward, which has obviously become incredibly more challenging for the council. That would be my view on that. And on the commercialisation, I just sort of pick up on your sort of point 4. It says, we considered this at the time the budget was set and concluded that it appeared appropriate given prior year's returns and the investment strategy. So obviously what we are talking about here is the statement of accounts for last year. We're in a very, very different year this year. And so I would imagine that there would be early dialogue from yourselves with finance officers around this particular risk for this particular year, because there could be, as we've seen with potential values and also returns. Obviously, there could be quite a fluctuation. There could be quite a change in the value of those and the amount of income they generate this year. So I imagine you're working closely on that, Mark.
A little bit. So I think an element of it is drawn from our audit, clearly, because the valuation of investment properties is based on yield. And clearly, if we are going to say hypothetically that an asset is overvalued and needs to be reduced, then clearly the yield from that asset has gone down. And I would expect that the medium-term financial plan would be updated to reflect a decreased yield for that asset across the medium-term financial plan's life. So we'd be looking at the arrangements that Annabelle and Hannah and team have in place for when and why they would update the medium-term financial plan and based on what data points they would use. So clearly I can't give advice on how to do something, but I've just given 2 areas where I would expect Annabelle to be doing something as a result of the current economic environment. So I think that's probably a question that you should be posing to finance colleagues. And I've just given you a little inside question for you to ask.
Yeah, no, thank you for that, Mark, and yeah, and you know, that is for the next process of budget setting. So thank you for that, Mark. I think for myself, that is all the points that I would like to raise on your report, other than to say that I appreciate the report and I understand that it's been an incredibly difficult year. We have, you know, this committee has had issues around fees and fee setting. There was a letter circulated back from the government, which members would have received in their inbox today, as a response to the letter that myself and Councillor Kendrick had sent on behalf of the council. You know, and I invite members to, if they have any comments on the proposed fees that Mark has put forward.
Just before I take any questions, if I may, so our fee table is based on what we presented back with the audit plan, and that was our proposal at that time before your 2 letters. Your 2 letters have been made into the regulator, so public sector audit appointments. So we have reflected what we think is the right fee to do an audit of your size and complexity based on what I have just reported. It is now with public sector audit appointment to opine, if you like, as to what the fee will be, both for you and every other council in the country. And I know that they are in the process of going through that deliberation approach, but there has also been the Redmond review a couple of months ago, which looked at total audit environment in the UK. One key cornerstone of that is audit fees to do a quality audit. So they are taking into account the views of Sir Tony Redmond in his review in coming to a conclusion. So my fee table is what we think the right fee is. It's not what you have agreed to pay. Let's be clear
Yes.
about that. The bottom line underneath says that, and your representations have gone into the regulator and they will be the determining arbiter on that. So I didn't want to have a huge debate about it, because we've had that before, but I just wanted to be clear about what the process up to now has been and where kind of that lies, because it's not overly, or it's not in my gift now, or your officer's gift or yourselves, because you've made your representations. It's now sitting with a third party.
I think that's fair enough, and I think we don't need discussion on that because we have discussed it and we've made our representations. So I look to members now for any other questions to Mark on the annual audit reports, and I see none, and I appreciate that. So I just again say thank you, Mark, for the report. I really do appreciate that, and the detail and the explanations. Are there any other comments from members on this item before we move to the vote? Okay, so we'll be voting on the approval of yeah.
There's also the letter of representation, management representation.
Oh, okay. Yeah. Sorry. Apologies. Yes, and that's at the end there, and we have that. Who would like to speak on that? Anyone like to comment on that?
Councillor Price, I don't have anything else to add. It's as drafted, and yeah, it would be normal standard practice for us to be able to be in a position to approve that. But obviously, it's for consideration of the audit committee, and then yourself and I will need to sign that appropriately. So, if anybody does have any questions, happy to take them.
It's a standard request. There's no specific requests pertinent purely to this audit, so it's one I'd use on any other audit. So you can take assurance that we're only asking for normal stuff. There's nothing Norwich specific.
All I would say is, having my name on it, I have read it thoroughly, and I believe it is a true and fair reflection of my knowledge of the situation. That's for sure. So it is a large commitment document, and I am happy to sign it based upon the work that both Mark and our finance team have done. And so yeah, I'm absolutely happy. Any comments from members on that letter? No, fine. So so we'll move to the vote on the 4 recommendations there. So all those members in favour, please indicate. That's unanimous, Jackie. Okay, so thank you very much. That's the closure of that item 8. The rest of the meeting will now commence under the line. Yep.
You just officially have to take a resolution to go below the line. Thank you.
Yes. Okay. So we are aware of the 2 items that are on the agenda, and so are members happy to take those 2 items below the line? So all in favour, please raise. Yep. Okay, that is agreed, Jackie. So that concludes the public part of the meeting.
Thank you. So members, that concludes the part of the meeting. We now need to leave this meeting and then book in for the below the line. Everybody's got the